Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, November 8th. Hope you guys have a great morning and happy Friday. We got a long weekend ahead of us with Veterans Day on Monday, so we won't see you guys until Tuesday again. So a big thank you to all our veterans who served our country, and we certainly appreciate everything you guys have done for us, the sacrifices you and your families have performed, and certainly want to say thank you. Let's kind of move on here. We got the economic data here, and we got two items here. We got the consumer sentiment for the month of November. So our previous reporting came out at 95 and a half. Forecast was supposed to slightly dip to 95, and it went up slightly to 95.7. So good thing. People are feeling about the same or slightly better, which is good. Wholesale inventories dropped, as you can see. August it went up 0.1%. However, from August to September it dropped 4.4%. So people aren't loading up as much as they were as they're anticipating a slowdown. This is something we'll keep our eyes on a little bit. So let's jump ahead here to headline news. Stock market is a bit mixed today. It's not trading really a whole lot in either territory. Dow right now is down about 50 points right now. And the market is taking its cue from comments by President Trump. Now, yesterday we had what was driving the market, and the market was taking off really well. There's comments out of China that uh, that we will be rolling back basically tariffs as part of phase one. And later on the day, in the U.S. had never came back and said no, that's true or whatever. They never commented on it, but there was reports that there was some internal debates and arguing about this. And basically today, President Trump came out and said that he never authorized or never agreed to such a thing. So, of course, stock market is pulling back a little bit today as a result of it. Uh, and we still, of course, are getting a little bit of the Q3 corporate earnings, so we still have some more Fed members speaking today. These haven't been as much of a factor. It's been more the, U.S. and China trade. That's been more the catalyst and giving us any springboard. So these have been taking a little bit more presence as we've seen most of the Q3 earnings reports, and nothing. We haven't heard anything out of the ordinary from the Fed speakers so far. Let's see how this affected the bond market. As you can see, yesterday we really were tanking a bit. We reached pretty much came to that point where we touched back around September 13th. As you can see here with that long line of wick, we did pull back. We ended up closing down 41 basis points, where we were down, I think, over 70 basis points here at one point. Right now we're up just about 2 basis points. We're about the same as where we would have left off yesterday, or pretty close to where we first started the day yesterday, because we were down about 30 some basis points when we started the morning. So the pricing should be pretty comparable, maybe slightly worse, but pretty comparable to what we started off the day yesterday in the markets here. Yields still kind of hang in there. It's trying to stay above this level here. It's about at the 1.9. I'm sorry, at 1.92 range. It's trying to stay above its Fibonacci level that kind of broke a little bit yesterday, but it's started off a little higher. It's down a little bit, and it's right about where that line is right now. So we'll see if that line can keep it intact and keep it under. Because if it breaks above it, that means it can potentially expand all the way up to this level here at 2.06. Push yields that much higher. Now we did get also a little bit of reprieve yesterday because the auction for a 30-year came in, and it came in above average, so that helped a little bit with the bond market as well. So that's pretty much a wrap. The rates are about the same or slightly worse than where we left off yesterday. Close wise, yeah, even with close wise, it's about the same. But we did have a pricing for the worst, so we probably had some pricing when it hit about the negative 70 something. So we were at that for probably a good portion of the day, and then they may not have reprice it for the improvement after it slid back a little bit. So it's kind of a pretty crazy volatile day yesterday, as you can see that. All right, folks, that's pretty much a wrap. If you guys are looking to buy or refinance in California, I'd love to hear from you guys. I am a mortgage planner with Pinnacle Home Loans. We could certainly help you out. We love to talk about your solution, your scenario, and see how we can create a plan for you guys, either to buy a home or how we can use your home as a solution to other situations like financial freedom, college planning, different solutions that might be out there. So anyways, best way to reach me is direct message me or email me. Email, of course, is the best of the two. I'll get that probably a little bit more quickly, and I do respond to those. You guys have a great rest of your day. Enjoy your weekend. We'll catch you guys on Tuesday. Thanks for watching. Bye bye.